Why real estate creates millionaires. Real estate is one of the oldest and most lucrative industries in the world. It has been responsible for creating countless millionaires over the years. From Donald Trump to Oprah Winfrey, many of the wealthiest people in the world have made their fortunes through real estate investments. Let's explore the reasons why real estate creates millionaires. Before we start, please subscribe to Guide on Finance, click the like button and comment down below so we can keep making content for you. Appreciation. Real estate is one of the few assets that appreciate over time. This appreciation in value is due to a combination of factors such as population growth, inflation, and improvements made to the property. When the property value increases, real estate investors can sell the property for a profit, or they can refinance the property to access the equity and use it for further investments. For example, let's say an investor purchased a property for $300,000 10 years ago. Over the past decade, the property value has appreciated to $500,000. If the investor were to sell the property, they would realize a $200,000 gain in value, providing a substantial return on their investment. Cash flow. Cash flow is another reason why real estate creates millionaires. Rental properties generate cash flow through rental income. The rental income can be used to pay down debt, reinvest in the property, or create additional streams of income. For instance, imagine an investor owns a rental property that generates $3,000 per month in rental income. After expenses such as mortgage payments, property taxes, and maintenance costs are deducted, the investor is left with $1,000 per month in cash flow. This cash flow can be used to cover expenses or reinvested in additional properties. Leverage. Real estate investors can use leverage to purchase properties with a small down payment and finance the rest. This allows them to purchase more properties than they could with their own funds. As property values appreciate and rental income increases, the returns on these investments can be substantial. For example, suppose an investor has $100,000 to invest in real estate. Instead of purchasing one property for $100,000, the investor can use leverage to purchase 4 properties for $400,000, with a 25% down payment of $100,000. As property values appreciate, the investor can refinance or sell the properties to access the equity and use it to purchase additional properties. Tax benefits. Real estate investors also enjoy numerous tax benefits. Expenses related to rental properties, including mortgage interest, property taxes, repairs, and maintenance, are tax deductible. Additionally, depreciation allows investors to deduct a portion of the property's value each year. These tax benefits can reduce an investor's tax liability and increase their overall return on investment. For instance, suppose an investor has a rental property that generates $10,000 per year in rental income. After expenses, the property generates $5,000 in net rental income. Additionally, the investor can deduct expenses such as mortgage interest, property taxes, and depreciation, reducing their taxable income. This tax benefit can provide substantial savings and increase the investor's overall return on investment. Diversification. Real estate is a tangible asset that can provide diversification to an investor's portfolio. Unlike stocks, bonds, and other financial assets, real estate is a physical asset that can be touched and seen. It is also less volatile than stocks and bonds, making it a good option for investors looking for stability and long-term growth. For example, suppose an investor has a portfolio that consists of stocks and bonds. Adding real estate to the portfolio can provide diversification, reducing the overall risk of the portfolio. Additionally, real estate can provide stability and steady cash flow, which can help offset any volatility in the stock and bond markets. Generational wealth. Another reason why real estate creates millionaires is that it can be used to create generational wealth. Real estate investments can be passed down to future generations, providing a source of income and wealth for years to come. This can be done through various strategies, such as setting up a trust or creating a family-limited partnership. For example, suppose an investor purchases a rental property that generates $5,000 per month in rental income. After expenses, the property generates $2,000 per month in cash flow. The investor decides to set up a trust and passes the property down to their children or grandchildren, who then continue to manage the property and receive the rental income. Over time, the property's value may appreciate, and the rental income may increase, providing a steady stream of income for future generations. By passing down real estate investments, an investor can create a legacy that lasts for generations and provides financial security for their family. Real estate creates millionaires by providing various benefits such as appreciation in value, cash flow, leverage, tax benefits, diversification, and the ability to create generational wealth. While real estate investing carries risks like any other investment, it has proven to be an effective way for individuals to build wealth over time and create financial security for themselves and their families. Subscribe to Guide on Finance for more ways to make money. Thank you for watching.